Kirk Duckwall here with the House Geeks, here with your Twin Cities market report and forecast for mid-June into early August. Well, along with the hot days are coming some cool trends. What do I mean by that? Well, maybe I should say cooling trends. Taking a look here at our metro heat map, we're starting to see on the outlier areas things starting to slow down. Longer times on market for sellers, basically along the St. Croix River Valley in some areas, as well as south of Prior Lake in the Credit River area, Elko New Market, also out west of Minnetonka. The one exception here is the far north metro is still moving along at a pretty good clip. Well, breaking this down, why are we seeing these trends? Well, it's inventory. Inventory is on the rise here. This is normal for this time of year, but the one thing that is different this year over last is we have about 10% more homes on the market. So how does this benefit buyers out there? Well, you have about 65% less competition in the marketplace per home, or maybe even better than that this year over last year. So more opportunity. We can see the market meter trend as that inventory goes up, that the market meter is slowing down. Now, as I've talked about in the past, different types of homes, different property types are going to experience different rates on that market meter. But the big change over the last forecast is, we've fully gone down into the stable market or slower territory for pretty much all property types and price points. Now, granted, by individual areas, you're going to still see homes that have a lot of competition out there, just again, depending on that location. Okay, we'll get into by price point where this looks like it's going for sellers and buyers alike. But staying here at the market overview, we can see overall showing activity. There's the 4th of July slide coming down, and we're on the rebound there. And that days on market, as I mentioned, is coming back up off of its lows. We're at about 23 and a half days on market. Now we're up to 31 on average. Another spike that we saw was on that cancellation rate this last week, but that is actually kind of normal over the 4th of July period of time. Again, less competition, more homes. Buyers feel that they don't need to be as committed necessarily on a particular home. And as you can see, once we cross that 4th of July time frame, that the cancel rate does run at a little higher pace than the earlier half of the year. And again, this is all price points, all brokerages, kind of tracking everything. But the second half of the year, we see that cancellation rate rise by just, it's only a couple of percent, but it is still higher than the earlier times in the year. Okay, median sale price. The forecaster was really spot on, hitting the mark with where the forecast model was. It was within 0.1% for the numbers that came out in May for the homes that went under contract in May and then closed in June, peaking out at 410. June, things sliding off a little bit. That's pretty normal. But we do usually see a little rebound for July's numbers. So not a big change. And that's the important thing for sellers out there. Yes, things might be getting a little bit slower, but prices do hold pretty close here. Here's, like I said, July 408, 141 on the median. Even in August, it doesn't change that much. It does come down by just about 10 grand to 398 before things really start to slide off as we get into the fall market. But overall, things holding pretty strong through the summertime. Now, if you are thinking of selling, I would recommend probably getting your home on the market prior to the second half of August, if possible, as we see things slow up that second half due to people going back to school, end of summer trips, state fair, and all that jazz. All right, looking at the buyers by price point here. We'll just break this down, starting basically with the $1 million plus. Again, holding, seeing some of those peak times still post 4th of July, which is something that is a little different about those higher price points. I know I talked about that in the past. Again, still holding pretty strong for the 800 to a million. And kind of coming as we get into that 6 to 800,000, slowing down a bit more post 4th of July, 5 to 600. This is a lot of homes in this price range in the Twin Cities area, and that's why we see things hold stronger longer. And then as we get into the 4 to 500 price point, peak market activity tends to be a little bit earlier in the year, and we can see similar trends for the 3 to 4, 250 to 3. However, when we get down to that 2 to 250 price point, kind of that entry level homes or condos, holding strong there too. Now, if you would like to know what the market looks like for your specific area in the Twin Cities, your specific property type, and want to know how to leverage that. Selling a home is one of the biggest financial decisions most people ever make, and so having everything at your disposal to make the best decisions, I'm always happy to run that comprehensive market report for you, as well as doing a recommended preparations list. You can always reach out 651-303-0019 or hit me up at housegeeks.com. Take care and have a great week.